Hey everyone, I hope all is well. I know it's been a while since I've made my last video, but I'm glad to be back. I wanted to do a recap on some of the more important topics that have come up since my last video and touch on some things that I don't see anybody else talking about. Now first, let's talk about the most obvious, which is conventional loan limit increases. Yes, I know you've seen every lender in their extended family posting loan limit increases, so I won't spend too much time on this, but here are some things that you need to know and that I don't see anybody else talking about. First off, these increases have not officially been announced by Fannie Mae or Freddie Mac. The other thing to keep in mind are these increases are only for single family homes and they haven't been announced for any multifamily loan limits. So the loan limit can be different in the future, and right now we don't know what the loan limits are for multifamily properties. Also, FHA and VA have not made any loan limit increase announcements, so please keep this in mind because these increases only apply to conventional single unit homes. For example, townhomes, single family homes, and condos. And speaking of condos, something else I don't see anybody else speaking about are the upcoming temporary condo guideline changes Fannie Mae is going to be implementing. Now starting December 1st, Fannie Mae is no longer buying loans in condos where it's determined by a regulatory authority or an inspection agency that there's a significant deferred maintenance or any unsafe conditions. Now, what does significant deferred maintenance include? I'll post a link description on Fannie Mae's lender letter, but here it is in a nutshell. Significant deferred maintenance includes full or partial evacuation of the building to complete repairs for more than 7 days or for an unknown period of time. And the project has to have deficiencies, defect, substantial damages, or deferred maintenance that's severe enough to affect the safety, structural integrity, or have some sort of impact on the inhabitability of the project. Now, projects that fail to obtain their certificate of occupancy or pass regulatory inspections such as a recertification for 40 years are also falling into this category. So again, local regulatory inspections or recertifications such as 40-year certifications will be affected. The major distinction is that the policy does not apply to routine maintenance or repairs that an HOA undertakes to maintain and preserve the condition of its property. Also, if there's damage or deferred maintenance that's isolated to a few units, such as water damage from a leaky pipe that goes from one unit down to another unit, and it doesn't affect the subject property that the buyers are looking to finance, this shouldn't negatively affect the condo review and approval. Now, special assessments are going to get scrutinized much more aggressively. Even if they're paid in full for the subject property, they have to be reviewed to determine if the special assessment is acceptable. And lastly, something that I always speak about whenever it comes to condos, because it affects our market so much, is reserves and Fannie Mae's 10% budget requirement. There's no longer any flexibility whatsoever for a lender to obtain a reserve study in lieu of a condo collecting 10% budget reserves. This is a biggie since a lot of associations collect little to no reserves as it is. Now, when I read through this, the major concern that I had is for the buildings that are older. So if you're a real estate agent or buyer, it's much more important to make sure that you go through these questions and keep these things into consideration when looking at condos. Again, I'll post a link to make it easier to go through. The next topic I want to talk about is Miami is now the second most expensive market in America. Now, I'm laughing because I think the information is skewed, and here's why. When it comes to buying a home, the first study by Realty Hop showed that Miami overtook Los Angeles for the second most expensive housing market in the US, only to fall behind New York City. But the analysis only compares the income to housing prices for the affordability index, which basically ranks how much the income residents spend on housing. In order to do that, it uses US Census data to determine income levels, and the problem with that is it most likely doesn't account for the increased level of work from home employees that not only have been working and living in Miami, but have also relocated to Miami. So please take that information with a grain of salt and be critical in your research. Now, when it comes to renting a home, a report from Realtor.com revealed that rental prices in Miami went up about 27% last month compared to this time last year. On a percentage basis, that means Miami ranks the third fastest metro area to increase in terms of rent growth. Now, these numbers I can agree with because they're much easier to track than the income analysis I spoke about earlier, which is much harder to quantify. This also supports that looking at buying a property versus renting a property could make more sense, but it also means that people who don't have the means to purchase properties are finding it difficult to find new properties to rent. All in all, it's been determined that Miami is one of the top markets that has and continues to attract people looking to relocate. So I don't see this market slowing down anytime soon, especially with the holidays coming up, which is usually another busy season for real estate down here. Guys, I post most of my videos across all my social media platforms, but if you want to get all of my updates, please feel free to check out my YouTube channel, where I'll be posting all of my videos with more information like this. And as always, thank you for watching, and if you have any questions or if you need anything, don't hesitate to reach out to me. Take care.